um, the uh, the for the meeting today. We are very, very happy that Daniela is taking the time to answer some questions about ideas and how Heartfelt is actually looking at ideas. So thank you for joining our session today. It's going to be recorded, and for everybody who is not able to participate, also put on the platform. I hope that it's fine for you, Daniela. That's great. And yeah, thanks again for being here. We had a great discussion in Berlin last time, and now we are partnering with Heartfelt for some of the ideas out there. And maybe can you tell us a little bit more about yourself? How did you enter this whole VC market, and where did this sort of spirit come from to start working with young entrepreneurs?
Yes, so hi everyone. Very nice to be here and very nice to meet you. So yeah, I think in terms of how I landed is starting with the last question, because I think that's quite interesting. And then with that, I answer a little bit of who am I. I landed in VC by chance, actually. My background is in law. I'm a Spanish qualified lawyer. I had been practicing as a lawyer for quite some time. And a few years ago, quite a few years ago now, I moved to Germany. And in Germany, with like working always in the financial sector, I moved into a law firm doing VC and started helping out one of the departments, the VC departments, when I was not busy with but then my first role there was in the crypto team. And eventually kind of fell in love with it. And then I would say when I left the law firm, the majority, I'd say 85% of my work was in the VC side, and then just a smaller portion more regulatory topics. So basically landed in VC by chance. And in 2021, I joined APX, which is the predecessor fund for Heartfelt. We're still the same team managing, so sitting on top of both funds. Initially as a legal person, but the more I was involved and started working with the entrepreneurs, especially as a first check deal, as just first check investor, sorry, which I'll explain in a second. I realized, first of all, from a lawyer's perspective, for once, it's not only that you're involved in the project, you're not just delivering a service, which for me was quite exciting, but at the same time, just joining conversations with founders with bright ideas and just eager to make a change. And I think in that sense, for me, is one of the most exciting things about not only, let's say, joining a VC, but specifically a VC coming in so early. Um, Now about what we do as Heartfelt and also managing APX. We are first check investor, which means that there's never too early for us, but there might be too late. What excites us the most are great founders with great ideas and this vision of making something that changes the way we do things. So for us, it's yeah, we look throughout whole Europe, being want to be the first investor coming to cap table or joining the first round of the startup. And in that sense, it's not so much about traction and numbers yet, although if of course it's something that you do have, is something we will look into. But for us, it's really focused on this early, let's say, the ideation phase and how you want to position yourself and what you're thinking and the power of this strong founding team. Together with APX and Heartfelt, we have invested in over 250 companies across Europe and the US, all different industries. So that's also something that we'd like to be very open to any new emerging technology and sectors. So we have invested in, if you go to our website, it's just a very long list. You'd see like all sorts of sectors and geographies in that sense. And yeah, that's a little bit of what we do. And happy to be here.
Very
Thank you.
cool. I love the story, and I think it's a little bit unusual for a VC to say you're a first check investor. To be honest, that's why, and it's really true. I mean, Daniela already told me twice, I guess. Oh, they already had an investor, so we cannot do it anymore. So they really take this topic and point seriously. Um, a lot of other investors would say, oh my God, that's like really hard. If you want to be the first one to invest, it's like always, I know a lot of investors who want to co-invest, and if there's five other investors who also like it, then there's enough sort of conviction to also put some money in. But if you're really the first one, this and that's also why we're talking this whole topic of ideation and selecting the right founder and the product market fit and the right ideas is a lot more important. So maybe tell us a little bit more about what kind of ideas do you like and how do you evaluate the ideas?
So that's always a tricky question because as a lawyer I would answer it depends. Depends on a lot of factors. And why I say depends on a lot of factors because as you said, this ideation phase, we not necessarily have yet the validation from external factors. That being, for instance, if it is, let's say we're talking about a Series A round, maybe there is an industry expert that can support us assess the case because as a generalist fund, we might lack that expertise in house. So when looking into ideas, I think at this stage, I'll say the number one factor is a founder, the founding team. But together with it, as a VC, what we want to see is how is the market? What kind of market we're looking into? How competitive it is? And is there a way to position? Are you jumping to red ocean, or there is an actually they're finding a niche that position you differently from others in that sector? Is the market growing or is the market shrinking? Is the market actually very small? So we do have a general assessment, even though it's early. We do try to understand what is the potential of that venture or what they're trying to create at this stage. Um, Another important aspect, and that's one of, for instance, one of the things that hit a lot of companies for a lot of VCs, I would say from 2022 to 2023, was how's technology changing? Not talking about your technology only, but overall, for instance, advancements of AI, how would it impact your business? So, because a lot of times we underestimate how fast those advancements can take place, and what we saw, not on our portfolio, but from other funds as well, is the fact that with the launch of LLMs in 2023 or the mass adoption of it, um, a lot of technologies or a lot of even AI solutions are being developed by startups. They just became obsolete because they could now not compete with the large incumbents out there. So I think understanding the market potential, but also understanding, let's say, how you compete against bigger players and how the market is evolving, how you defend yourself as well, is also extremely relevant. And I think in addition to that, there are a lot of factors that we would look into as well. So of course, defensibility is a question mark at the early stage because you're going to be moving along, the market's going to be moving along as well. But one important aspect for this early phase, and that's what we call sometimes when we do have some sessions that are very focused on the founding team, is how is the founding team thinking of it? Because it is expected that a big chunk of our startups are going to be pivoting. So not necessarily you're married to the first idea that you pitch to your investors, but if we are convinced of the way, if they understand the market, we call instead of the product market fit is also the founder like fitting into this whole scheme, is how are the founders thinking about it? What are the founders' vision as well? What are their motivations? Because they can still be doing a nice business, but just not be a VC case. So I think it's always important to factor in all of that. But to wrap this up, this whole conversation, I think it's at this early phase, I would say the number one factor for an investment would be the founders and how they're thinking about it. And in terms of ideas, definitely, I would say ideas that for us, it's a very cliche, but we answer the why this, why now, why you, and for whom. So kind of like ideas that have a purpose, ideas that are actually addressing a problem. There's a market for it. And and yes, in terms of technology, you you might face a risk, but it's at least not that obvious that you're going to be eaten up by the big players.
Okay, the founders are most important. I mean, that makes a lot of sense. If if the founders are so important, how do you evaluate the founders and what would you give our audience as advice? How can they, develop themselves to be more of interest for somebody like you as an investor?
Yeah, so I think there are a lot of factors we look into, and sometimes for this first check investor, sometimes when the founders, when we are having this, we call this section the second or VD session within our process, they say sometimes it sounds like a therapy session because we're asking how they're thinking. I think in our way of looking into it, there are specific objective topics I would like to see. For instance, the founders do understand the market. They do have a domain expertise. It might not be that all of them do have, but they do have an understanding where they're tapping into. They're just not opportunistically jumping to that venture. Why so? Is because I mean there are founders who are extremely great entrepreneurs, and then they opportunistically jump into some cases. But most of the times, having a deep understanding of the market, especially to navigate what I mentioned in the last reply, is quite crucial. So we'll be looking into this kind of the founder market fit that I mentioned before. Um, I think one topic that sometimes whenever we always bring up during AC, especially on the follow-on case, is how resilient the founders are. And that's not necessarily something you develop. It might be that based on past experience, you have kind of built a thicker skin related to this. But resilience is a very important topic too. Hard, difficult to measure, and we always try to assess our past experiences to understand how they went through those situations and how they made decisions in those situations. And why is it so relevant? That is because even though we would like VC path to be very linear and exponential, it's very bumpy. And the macros, they change like from political to economic and just like even social aspects that can influence how your business can evolve. So being a founder that is resilient, a founder that is able to also make decisions that are fast and understands the market, at the same time be flexible enough to adjust to that and hear out to what is others are saying, telling them. I think that's also, yeah, those are all the characteristics we try to look into. How? It's something, yeah, then we go back to our psychology sessions, is we really try to see how founders are thinking, their vision, and truly try to see their reaction in different aspects related to this to really to kind of be able to measure, even if it's very early, how would they see different scenarios to play to take place in their venture.
Very, very
Difficult.
interesting aspect. No, very interesting aspects. Okay, I think the founders understand, and I totally agree that market understanding is often not deep enough, and a lot of the teams also don't look at, competitive environment with enough sort of time and focus. So I understood that. And if you look at the ideas themselves, do you think there are good and bad ideas? Or would you always say, I mean, we all know this 90% execution topic, and you can make, something out of most ideas. But don't you think there are ideas which is where it's really hard to develop like a really good venture out of?
Yeah, that's for sure. I wouldn't call ideas that are good or bad because they can still have a market, but it's just not big enough. I when would say what differentiates a good idea from allegedly a bad idea, I would say, for instance, um, an idea that is not necessarily solving a real problem, but is just nice to have, for instance. You can still have a low like a market, or you can still have a number of customers, but in the long run, for this idea to be good and even be VC backed, we want this to grow exponentially, so be scalable. So I think if you were to compare what is an idea, yeah, an idea that actually changes the way you're doing things and you're actually solving a real problem that addresses the needs of your customer, of your client, whoever is your is going to be your client, who you're selling to. I think that's what like gives it the foundation of a good idea. It's not necessarily that the other one is bad, but it's maybe an idea that, um, for instance, it has a very small niche market as well. That's, for instance, sometimes we do have solutions that are addressing a very, very specific problem, but the ability of that scaling to other adjacent sectors is very limited. So it's not that necessarily it's bad, but might not be VC backed because it doesn't have this exponential growth potential that we look for. And I'm always talking about this growth and this growth for us, why is it so relevant? Not only for us, like Heartfelt, but just generally speaking as a fund, we need to return the investment of our investors. So we're always looking for ideas that um, is not like a traditional small, medium-sized enterprise that can be profitable, but can be like a nice to have company. But we want something that economically makes sense for us too, and that has this faster pace of growth. So that's why sometimes you might hear from VCs that an idea this it's not growing as anticipated, or this product is not moving direction we want to, even though you do have some traction. It's just because we just to clarify on that point that exponential growth is that we're always looking for something that makes sense in the long run for the people gave us the money initially. So, but yeah, but that to say, yeah, some ideas that might not be good, it might be difficult to eventually, even though you have the greatest founding team, not necessarily having the right, let's say, setup for this is might not be it might be difficult to defend the long run, especially because more and more you have more funds, but also more startups. So the market, generally speaking, is becoming more and more competitive.
True. That is, do you also see that centralization in general, that a lot more or that less teams get more capital and the long tail is suffering a little bit, or would you see that differently?
Yes and no. I think as the first check investor, it does allow us to see more horizontally. So that's actually there's hope. So definitely on that sense, we do see quite a lot of funds being active in different dimensions and not so high concentration of capital. But in the long run, for sure. And I think I was 2 weeks, or 1 week ago, I was in a small group talking about the overall performance of VC over the last 20 years and how do we see the concentration of capital and how it is going to evolve from now onwards. And I think one of the interesting topics was for the last 2 years, the majority of the capital in terms of aggregate amount, not talking about number of deals, but in terms of like Euro USD amounts, the majority of the private capital being deployed into companies is concentrating to a very small group of companies, those being OpenAI and the likes. Um, so I think, yes, there is on a more of a later stage, there is a higher concentration. There are topics that are so in demand that eventually you do have a lot of venture capital funds jumping quite quickly on it. We're also seeing a lot of corporate funds also jumping into it. But I would say the hope is that we see on the early phase is that um, there's still quite a bit of diversity, and we do see a lot of kind of rounds playing around without necessarily having this higher concentration of capital. But that being said, a little bit after us is already starts kind of like the funnel starts in, like being very steep.
Okay, understood. And if I mean, you have invested in great companies, and 26, for example, and you said you had a couple of hundred investments overall in that whole group. If you now look at the sort of past and pick or look at the winners, we all know that VC is sort of an outlier business, and that's why, all the VCs are always looking for the best of the best. Is there anything that you learned from the past, or was it, often luck to be there at the right time? I mean, what did you do right, and where would you maybe change stuff?
Um, I think for the last part, what would you change stuff? I think there's no one recipe for making right investments, and I think each of us, and speaking on behalf of the whole VC community, we're always learning as we're doing, and we're always having to adjust as we're doing. So the topic of resilience and flexibility from founders also apply to us. Um, what have we learned from the past? I think definitely one thing, especially being early stage VC, is that market plays a big role in how we're making decisions, but also how our portfolio is going to evolve. Interestingly, over because APX, we started making investments around 2020, 2018. So throughout the last, let's put it away, the last 8 years of investment, we always had, let's say, our ranking, not a ranking, but like how we're seeing our portfolio change significantly. And that is because could be market evolving, could be technology changes, could also be performance, could be a big player coming on board. So I think all of that to say, one of the lessons or one of the topics we have to live with is the fact that an a strong early stage bet, or even let's say even moving to seed round, don't necessarily sustain kind of being a strong portfolio company in the long run. But definitely in terms of what we do right, and I think we're very flexible. And I think the flexibility sounds like a bit of a cliche or a buzzword, but the truth is that because we're not married to a specific, let's say, industry or business model or geography, yes, we are Europe and the US, but we're quite flexible in that sense. I think one of the things that I think that we do right is that allows us to really, really navigate into any industry. Um, in order to do so, as an early stage investor, we have to rely on a big, let's say, network of both LPs and mentors and experts that are supporting us. Because it might be that not the same team that is analyzing a fintech company can analyze a biotech company, but this sort of flexibility and the access and network to people that can support us assess the case as from with their own industry expertise really helps us tap into all sorts of industries out there. And I think from a VC perspective, definitely is one of the things that I would say that we're fortunate enough to play along with a very diversified portfolio that allows us to kind of navigate the hurdles of the market quite nicely.
Wonderful. We already have some questions in our chat, and I would start with this one. What do I need to have to come and have a meeting with you? Is a business plan enough, or do I need an MVP? So does it need, to get the possibility to pitch to you?
So to us, me, Daniela, and my Heartfelt team, you don't necessarily have to have you don't have to have an MVP. You don't necessarily have to have, let's say, I mean, what we look for when you apply to us, you do have to put a deck. So let's say, let's put away having a sort of business plan, understanding what you're tapping into. Definitely, we will look into it. But you don't, your product not necessarily has to be there. So that's for sure. In that case, you don't have to have a prototype. You don't have yet to be monetizing or have specific traction. As I mentioned before, they're never too early, but might be a bit too late for us to come in. So that to say, whenever you feel that you have an idea and you have thought about this, why the business plan makes sense, that you have thought through the different dimensions of this business and how this business can be put in place, that's already enough for us to talk to the startups.
Wonderful. That sounds good. Um, Umar is asking, is it better to raise funds before or after product market fit?
It depends because it depends on which kind of investor you're targeting, what kind of round you're going to raise. For instance, early stage investors like us don't necessarily have to have product market fit yet. Um, Even though we want to see how you think about it and how you're validating your idea. For business angels, what can be for some business actually even more crucial in the early phase than actually VCs because business angels can be an add value in terms of opening doors in from industry perspective or supporting the early phase of sales or just generally their network can be extremely relevant. So for those, not necessarily is product market fit or even like an let's say already having the product out there and being tested and validated is needed. But it's true that once you have proved your idea, so you don't know there's not only an idea, but it also there's more to it, and you have the product market fit translate into knowing what your customer needs and having validation or confirmation that that is really out there. There is a confirmation that they are interested in even buying your product. It does help, for instance, normally it does help, let's put a higher valuation when you're raising a round, or even being able to raise larger amounts and so on. So I think it depends on what you're trying to attain and what kind of support you need and when do you need the capital. One important factor as well, especially in Europe, there are a lot of public funds. When I say public funds, just like coming from specific governments or different organizations, that it might be that you don't have to raise from private investors, but at a very early phase, you're able to collect some funds to give you this boost before you go out there and look for dilutive capital. So that's just to say it really depends, but also depends on your needs, but definitely depending on who you're targeting, what you're trying to get out of it, one phase might be better or not be better, but just more common and just might fit into your what you're looking to as well.
Okay, great. Um, Antoinette, yeah, that's an interesting question. I mean, for VC, but maybe you have thoughts about this. Like, what direction would you send someone who's building a non-profit startup? You know, like, because for with Tsunami, we now are also focusing on non-profits because we believe that, you know, especially DAOs are very, very interesting for, you know, borderless non-profits for the future. And, you know, we want to develop this sort of new type of organization. But what would you um, give as an advice for founders of nonprofits? Is there anything that you could give there?
But advice in terms of raising capital or
Yeah, I guess probably raising capital, but maybe also the general setup. Antoinette, I don't know. Maybe you want to clarify. Yeah, capital.
Sorry,
yeah, so
yes.
capital.
Yeah, please. Thank you.
Yeah, so in terms of capital, unfortunately, most VCs will not look for, let's say, a not-for-profit, just because, again, talking about the story that we want something that we can sell later on and realize profits or returns to our investors. But I think there are quite a lot, I mean, not only initiatives from governments, but there are also quite a lot of private, let's say, institutes focus on supporting those initiatives. So depending on what you are in which geography, what you're building in which geography you are, you might be able to unlock some of those public capital as well. But and it's still also a lot of corporates do invest as well for not-for-profit organizations. In some countries, even have tax benefits if you do so. So they actually do have the internal incentive to kind of get engaged with those. So if it fits into what kind of the business profile and the kind of company they're building or they have, it might be even fit into the purpose of obtaining this sort of tax benefit. So kind of two interests align. But I would say mostly on the public sector, there's quite a lot of money flowing into this direction. It's just like looking for the right partner. Fortunately, I cannot shed more light on this because unfortunately, it's not the sector that we work with. But I'm sure there is something along those lines, especially in the European Union. There's quite a lot of money in this direction.
Thank you.
Victor is saying he loved the first check mentality at Heartfelt. It comes with significant risks, obviously, but also potential. Are there internal factors you consider to de-risk investments before making a decision? He's specifically asking in the context of the AI infrastructure industry.
Yeah, so ways to de-risk. I mean, definitely, the sector we invest, like how we invest, it has is what we say that we have the highest potential upside, but at the same time, it comes with a lot of risks. Definitely what I mentioned before in terms of assessing the case from a deeper perspective, even though we not might not, let's put it away, I might not be the biggest expert in, I don't know, defense tech, but we might utilizing our network does help us to kind of assess the case. But for those more complex cases or industries, not necessarily that we push for the first check, but actually we join the first round. And then the risking topic on, let's say, what Chris mentioned before, the validation of external investors, is including an industry expert, definitely helps. And normally, it's not that I'm saying that we look for this specifically, but normally when you are at that stage of an earlier round, it might be a little bit later than the kind of very early phase that we look into. Even though it's a first round, it still is but it's past the ideation phase. Is there something out there? Because most of the other investors will look for that. So that to say that the risking might just play along, not necessarily on our end, with looking for confirmation from our network and also us trying to understand that our own study of the market, the founders, the product, and confirmation for those in the industry that this makes sense. But at the same time, it might come along with the fact that we are participating around that there happens to be from a business angel slash or a VC that has a deeper industry expert. So if they're betting on this and haven't looked at the entire market in that specific industry, is a strong signal that that's at least on their view as industry experts that this is the right direction that the market is moving. But at the same time, yeah, the fact that the company might be a little bit more advanced or might have some kind of validation point as well, whether it's an LOI for someone, whether it's a product that's an early traction. So it might be that even if don't require, it might just be the case when we look into a situation as such.
Very interesting. Shruti has another question. How important is a company registration during pre-seed funding? Can this be done later, or are you only investing in incorporated entities? Probably.
We can only invest in companies. That's a clear answer for us. Also, we have to KYC the companies we invest in. So I would say regulated funds. I mean, it might be that angels, you do have a kind of a fluid perspective. But from a more legal standpoint, you are investing in the entity that eventually is going to take on this business. So that to say, if you're eventually going to flip the entity, you just need to make sure, like we as an investor, we look for the company that holds the IP, has a team, has the distribution, has all the different dimensions that are required for this business to fly. So that to say, unfortunately for us, we cannot wait for registration to be later. What we do though, because we're so early stage, and it has happened a few instances that we go through the entire process without the company being registered yet. But eventually, before we fund, so before we sign a contract and employ the capital, then we actually they set up the company. And also, just for pure contract and maybe a too legal answer on this one, we invest mostly as SAPEs of convertible agreements, which means that they need to convert into equity, and it has to be the company for that.
Yeah, I totally understand that. I mean, we usually recommend to our founders if they're still sort of in this ideation, team finding phase that they can work with a digital entity. But whenever there's, money coming in, obviously investors usually require some sort of entity.
Mhm.
From a geo perspective, are you investing in, certain locations only, or are you open for pretty much any company type? So be interesting to hear if you have any limitations there.
So we are pan-European as a fund. So we look into startups being built in Europe. And when I say Europe, it also includes not only European Union, but also the UK. And we do also look into the US. Historically, was mostly European founders with US entities. Right now, we're getting more of a presence in the US, which we're getting also deal flow beyond that. But other than those regions, so now going back to Victor's comment on there are too many verticals and too many different things we do. Um, we as a small team, we also don't have capacity to and consider the volume speed of investment. We don't have, unfortunately, capacity to look into other geographies. It's already quite, we have a really big network of lawyers to make this work. So it definitely is something that we wish we could tap into, for instance, Asia, or me, myself, I'm originally from Brazil. So looking into the whole Latin market, we looked into it at some point, but notice that also sitting in Europe, and it's really far away. Not only there's a continent in between there's an ocean between the two continents, but also the VC ecosystem is different, and there are different need a way of doing it, and just looking from an external, like a foreigner perspective, is definitely not easy. So that to answer Europe, US, but there in terms of companies, we're pretty much all sorts of companies. We're flexible to the extent we have limited liability.
Okay, understood. Joshua is asking, what are the most significant market gaps or technological challenges you see in the self-custody wallet space right now? I mean, that's like a token. That's like maybe a general question. What is your like focus areas? Are you looking into Web3? Mostly AI, as far as I understood it, for our users, or
No,
no?
no, not mostly AI, although it's true that for the last 2 years, I'd say whether from an operational standpoint or from product perspective, it's just expected that AI is part of it. It's kind of like having a cloud. There's like everyone expects to be part of it. But we are looking into Web3. We even could invest in tokens, or we were investing in tokens with our predecessor fund. The current fund, as a regulated VC fund, we have some limitations in this because it has to finish the definition from the EU and German regulator standpoint of a venture capital, which is mostly equity. But in terms of with the current fund, we do look into, let's say, mostly what we call blockchain enabled. So the technology is there, but a bit far away of the traditional Web3. Well, traditional cannot even call traditional in that sense, but the what mostly you'd see in Web3 companies. But yeah, so that to say, we look into the industry, but from a mostly equity perspective, and right now, I'd say the majority of our recent investment is more related to, let's say, trade, finance, wealth management
Okay,
on the web of the blockchain side. Let's put away all the other all other industries are still out there, and beyond this, the
okay.
blockchain and Web3.
So then that question might be good. So what are the most significant market gaps or technological challenges you see in the self-custody wallet space right now, and which request for ideas in this sector would Heartfelt be most excited to review?
So I think in the whole market for wallets and how and what you when you try to deliver something or try to deliver something that is not out there in the market. We have invested actually. One of our companies started as a wallet, then they moved along into a different product that has the wallet infrastructure layer behind it. Um, and what we notice is that the wallet market is highly competitive with very strong players that people just know of. But I think not talking about the pure self-custodian wallet side, but generally speaking, anything that within the whole we'll call crypto, but Web3 world that touches consumers, I think, and what excites me the most is solutions that are not developed for the only crypto savvy or the specific, like let's say, community within that, but rather, if you want to attain some sort of mass adoption, and that's one of the hurdles that we do have with self-custodian wallets, is how do I deal with it? Most of the people that I do know, even that invest in crypto, they still don't get a hang of, let's say, the different wallets they play along with. So anything that makes you feel and touch as anything else that is non-crypto, I think definitely for me, I see as one of the big potentials that we have right now in the market, in order especially to increase the whoever are your users, or just increase the let's say in terms of adoption, what is the market that you're looking to? Does it make sense?
To me, yes. Um, Umar has rather a tsunami question, but now we're asking Daniela. So, Paramount Ruler in AI, especially, how do you distinguish between hype-driven ideas and durable opportunities?
That's a very difficult question that a lot of VCs are trying to answer right now. I think um, I think one important point for whether VCs or the founders of startups, especially in the realm of the AI world, is to understand what are the solutions that you have out there, how much of the market they control, and why, if there is a portion of the market is not addressed by them, why so? Could be just because, I don't know, maybe my grandmother would not be using ChatGPT, get that. But it could also be, and then it goes into specific areas that eventually cannot rely on large language models that maybe they derive from the US and there is a data issue, or maybe there's a GPU infrastructure problem as well that doesn't allow them from a data perspective to also rely on it. So how do you distinguish hyped ideas and durable ideas? I mean, durability, and going back to what we spoke in the very beginning of the session, understanding if your market has potential, sorry, the product has potential, the market is growing, and you are defensible also in terms of the new technologies coming out there are not going to eat you up. Definitely is important, but there's some things that we cannot predict, of course. So it's a risk that VCs, but also founders have to play with. But definitely going back to the exercise on understanding what is the market you're tapping into and why others that are bigger than you haven't tapped into. Maybe it's their next project in their roadmap that a company like ChatGPT is going to start doing something, OpenAI is going to start doing something like that. And eventually, yes, who is a smaller early stage founder to outcompete a larger player that already has a market? But I think there are a lot of sectors and niche groups that not necessarily rely on this, can rely on those big players. And then I think at that point, understanding why and how, and if the solution addresses this niche, definitely for us, from our perspective, it makes it a strong idea to kind of outpace the large players in the AI world.
Okay. Um, Based on current crazy progress of AI, um, I can implement my idea by myself, then I'm a team with one member. My plan is to hire other people later. Is it possible for you to invest in such a business, or is it acceptable for VCs, like in general, to invest in one person teams? We at Tsunami usually, require a second co-founder for joining the cohort, but how is it in
Yeah.
your case?
I mean, it's not necessarily a no-go, but we'd also like to see more founders. And the more founders, not necessarily expertise. So then answering with AI, maybe there are a lot of things that you could develop that then you could do yourself that you don't need the expertise of the other founder. But it's the when you have one or two other additional founders, you have to also have different people, different experiences, different ways of thinking. So more this human aspect of it, of contrasting ideas, is still quite relevant when if you just develop the company yourself, you might be married to one idea, you don't see what is out there. Some people can successfully do it. I'm not saying that's why we say that's not a no-go. We're just going to be a little bit more careful and trying to be really understand how the person is thinking and how the person get access to even support advisors and so on. Because sometimes just being one person in terms of developing idea, you might miss out on some, like to say, contrasting your view with others. But yeah, that's the more human aspect of it, not necessarily the expertise that you might kind of, let's put away, replace it with a strong technology out there. But this is the way we think. And we're very human from our name, Heartfelt. We're very human driven. We think also the value of humans behind it. But I do know quite a few funds that more and more, also from an operational level, they really look into very small teams that they want that also for keeping the operational costs very low. So the raise is really focused on the other dimensions of your business. They really look into kind of smaller teams, but really focus on kind of AI as the layer, like AI agents to support that on building it. So there are also different opinions related to this. So that's to say that's not all mine speaks for everyone else in the VC world.
Wonderful. We have another question. We're over time already, but we have another question here. If you decide not to invest in a startup, but that same startup later secures investment from a different investor, do you go back to them after, even if they were turned down before with the same VC? Um, I don't know if
It
I understand the
depends.
question right. Yeah,
I,
depend. Okay.
yeah, I think so. What you're trying to ask, I think, is like if someone rejects you, can you always, for whatever
Can you go
reason,
back?
could you
Yeah,
come back to
can you
it,
go?
to the
Yeah.
investor? And I think it depends a lot on what are the rejection factors. Because it might be that the rejection is, I don't believe in this market. And if the rejection is, I don't believe in this market, having another VC supporting is a validated factor, but this still doesn't believe in the market. So I think it depends on what actually the reason not to move forward is. Um, but the truth is that what we always try to also say to, tell our founders, especially when they're raising the first round, and we are really hands-on in supporting them, is looking to the rejection reasons. Are you bringing up to the table something that is different to when they look at the case? Or if they're going to look at the case, they're going to be just actually annoyed for looking at the same and coming back to the same reply to you. Because if you bring up something different, of course, it's worth it, especially because VCs are dying to look for outliers. So if you are bringing a strong case to the VC and you are, maybe they said, I think this is a very small market, but eventually you have been talking to your potential customer and you found a niche that has a much bigger potential than what you initially pitched for. You're changing the narrative. You shifting your shape, let's say, shaping your business and defining your strategy, which in a way is a different standing point from when you initially talked to that VC. So I think depending on what the rejection reasons were and the situation, I think it's could be worth it to come back to them, of course. And we're always open to talk about it as well. It might not be that having another VC necessarily changes our reply, but it might be other factors that lead to it.
So what is the best way to send, pitches to Heartfelt? Is there like is it better to reach you on LinkedIn or is it better to get an email for Heartfelt? So what's the best way to reach you?
There are various ways to reach the me and the team. I think reaching out on LinkedIn, that's totally feasible, and I try to reply as soon as possible. If in any case, what we do have on our website, and I can put it here for you, not that I'm just promoting our fund, but we do have 1 second, in our website, there is a that I can put the link, the pitch link here in our chat, and you can just submit it to there, and then it goes automatic to our funnel. Or you can reach out by email. All our emails are our first name, heartfelt.vc, so Daniela at heartfelt.vc. So either all the ways we try to react to them as soon as possible. So feel free to, if you're interested and if you want to chat, feel free to reach out to us. And yeah, thank you.
Amazing. Thank you so much, Daniela. That was really, really awesome that you answered all these questions and gave us insight into, Heartfelt and how you develop your venture business and the fund. So I, yeah, want to say thank you. I hope to see you soon in, Berlin or whenever where we possibly can meet for our next lunch or so. And
Sounds good.
really, thanks a lot for joining the session. I hope to see you also at, the next VentureTon demo days, for example. We're going to invite to the Bounty demo day and Investor demo day, and we will definitely send you invitations. And
Sounds
yeah,
great.
thanks a lot for joining
Thank
us today.
you. Thank you.
Perfect.
Thank you for inviting me. It was great. And thank you for all the questions. I think those are extremely valid questions. And I think it's great for you to be thinking of all those I mentioned. And yeah, would love to hear from you all.
Wonderful. Yeah, we will develop our ventures as good as we can and definitely get back to you as soon as possible. Perfect.
Sounds great. Thank you.
Yeah, thanks everyone for joining the session. We thought of adding some more ideation topics, but I guess we will have, we will find another session for that. And yeah, for now, I hope everybody has a great day, and we prepare for our VentureTon. Only starts in roughly 10 days, so we're very much looking forward to that. And if you know of any founders who still need like some remote support, let us know.
We do.
Thanks a lot, everyone, and have a great day.
Thank you.
Thank you. Bye.
Thank you.
Bye
Bye.
bye.
Bye.